morning, everybody. So welcome back this morning after, I hope you enjoyed yesterday's sessions. It was very interesting, obviously a lot around technology. And this morning's sessions with the three of us around alternative finance is to try and look a little bit more in detail around some of the investment perspectives around this. And I thought, rather than drill down to particular sectors, I wanted to try and take a more broader look at responsible finance and its role as an alternative investment market. Just kind of a few things about ourselves. And our role in the ethical market has predominantly come through from the Islamic Finance. We specialise in Sharia compliant investing, but through a rebranding process are taking a look at this from an ethical stance and a responsible finance point of view. And we look after everything from an online proposition for retail access to that market through to family offices, high net worth individuals, and also work in the private equity aspect, looking at raising funds of finance for startup companies and small businesses. Enough about us. So I just wanted to cover just a few points around views of investment marketing, alternative investing, why it's important to the marketplace, and then the role of responsible investing and the Islamic finance sector in that. And then to look at around maybe the opportunities in that, just give one or two thoughts or examples that are being perceived as a way of looking at alternative investing. I want to start off with a quote. We spent yesterday looking around technology and how it drives the way we're doing things. This quote I thought was a really pertinent one, coming from a gentleman who probably designed most of the technology sitting in our pockets or in front of us today, or if you have an Apple anyway, Steve Jobs. Technology is nothing. What's important is you have faith in people, that they're basically good and smart. If you give them tools, they'll do wonderful things with them. The investment market is that in many, many ways. We spend a lot of time looking at how FinTech and technology can drive that, but actually what we mustn't forget, it's also the people behind that really counts, the people in this room and the people that we connect with and work with. So why responsible investing? Well, I start off with that, relationships. The relationships that we have with our investors, and in fact the investors have with their money, is changing. The way people actually look at investments is becoming more responsible, the way they react to things and the way they do things. And people have a greater focus on things that are happening in society around them, the welfare and the way the money is affecting things. And we'll look at that in a little more detail in a minute. They use things around negative screening. They want to avoid investing in certain perspectives. So the alternative investment market is trying to provide something which can show them how they can invest and actually avoid those things they don't want to invest in. Also around unnecessary uncertainty. I enjoyed your kind of, when you look at the response from the effect of your investments and the returns you're getting, that 0% loss of capital at the end says a lot. To present that to an investor is a big part of that. And I think we're looking for that to avoid that uncertainty. How can we look at it? And the alternative investment market generally has been perceived as more risky. That is changing. It's now looking at things like around positive social return. I'll pick up very quickly on that in a minute as well. And also look at the good of financial return and the collaboration between finance and what social return is. This is a really small, so I'm not going to read it out, but it just points out the three areas around what we call the ESG. So in terms of governance, looking at corporates, the transparency, how they look after their employees, code of conduct, those kind of areas, very important. We spend a lot of time looking at businesses and their financial returns, but we need to look at the people in the business as well and how they deal with things. There's some of the biggest issues we've seen in the last couple of years, Volkswagen, things like that, have come about because the corporate governance hasn't met certain standards. Environmental says a lot for itself. We know about how we affect the environment, the climate change issue that's going on, COP21 last year, the year before actually now, Paris Agreement, and all the things that are happening. We need to think about those from an investment perspective. And then finally, the one is social. That's social, which is probably the one people don't understand best. But things around human rights, diversity and equality, health and safety, communication, product responsibility, all those things are very important when looking at the alternative investment market. And what is the role of the Islamic financial institutions? I said my background, one being conventional market, having been a stockbroker investment manager in conventional market for far too many years than I can remember. The last 10 years I've been focusing and growing greater into the actual financial markets in the Islamic world. And this is something which is kind of born out of the credit crisis and is becoming more and more relevant. And we're looking at ways we can actually now collaborate this between not just the ethical side, but also how Islamic finance can also fit with this. And Islamic finance isn't just for Muslims. It has an opportunity to provide an access to a market that is really relevant to a lot of people. So I've put some points here just to understand why. So first of all, the avoidance of debt. There are standards within Islamic finance set by OFI that means that there can only be certain amounts of debt in place, and that is important. Avoidance of excessive risk. So they're called qarar. Avoidance of gambling is an important perspective. It means the derivative market is almost non-existent in Islamic finance. It does exist in some basic factors, and has some compliance around that. Negative screening out very clear objectives. It's based upon a codification in the Sharia that enables people to understand very clearly as to what and why things are being avoided. Whether it applies to you or not, of course, as a Muslim or non-Muslim. Consideration also around social aspects and positive contribution. So how it affects welfare and how it affects the social return is a very important perspective. Two other aspects I think which are really important from an investment perspective. One is the link to the real assets and the real economy. Now, we live today in a market where so much is based upon a derivative-based market. I think the figure I've got in my head, which is probably way out of date, was somewhere in the region of $27 trillion. 6 times the global GDP sits within options derivative markets. The one thing we need to actually look at in alternative investments is how we attach it to a real asset. Mark, coming back to you again, that's what Estate Guru have been doing. So if we can look at that, the real tangible asset is a very important perspective, and that's something that Islamic finance has a strong hold in. And then finally, the sharing of risks. The risk doesn't just sit with one party within the contractual obligation, but making sure that risk is shared. So just kind of to sum that up in terms around awareness, it's about understanding those shared values across those between the investors, those who are receiving the money and how it's invested, and that engagement with the investor. And that's quite important because that now is showing that the investor wants to increase their education. They want to understand what they're investing in. Now, when we look at the traditional equity and fixed income market, it tends to look at the kind of machinery behind that. With the alternative investment market, we're seeing the opportunity to grow greater education about the underlying asset and the investment they're looking to invest in. And that's giving a real growth in the market. And I think one of the things I think Hassan will probably talk about later is that this also leads to this greater kind of role around the millennial engagement. Engagement in this growing part of our employment, those going to employment, I think by the year 2025, it's something like over 1/3 of the population of the world will be millennials in work. You know, this is going to be very important, and how we engage with the millennials is going to be absolutely critical, because they will be inheriting the wealth, they will be earning the wealth, and they will be thinking about how they want to invest that wealth. And therefore we need to make sure we keep pace with that as well. Just a couple of a list of initiatives around a number of the organizations that are trying to regulate and guide and aspire us to meeting some of these needs. And I wanted to pick up just on one. I mean, there's a whole load there, but the top one, the UN, United Nations Principles for Responsible Investment. And that has very 6 clear principles that are basically voluntary, but also aspirational. I'll just put these up here because I'm not going to sit and read through these. You can look them up, you can search it on Google, and they're very clear. And there's some good discussions and talks around this. But the whole point around this is to aspire as investments to look, you know, especially in the alternative investing market, how we can actually aspire to doing things which are responsible. So, just to pick up on a couple of things, just before I'll let Marat take his photograph first. There you go. The overall opportunity for alternative investments. So, one aspect around this is the technology. We spent yesterday talking a lot around about how technology and FinTech is driving and transforming the way we do business. We're also talking a little bit about how the customer experience, and I think that's going to be brought up today more around the technology discussions later. I think we need to take that on board. So not just from an investment perspective, but how we also deliver that as well. And the greater connectivity it creates. It has a huge potential for fast growth. A lot of investors are not sure how to include themselves within that marketplace. So we have an opportunity to create and develop that. And the talent growth behind that of bringing new people through who understand a different way of working in this market, who can actually see a way of being part of the investment world and being investing in money, something that has a product and has a useful kind of part in society. And the final point around the focus on what is both good, both financially and socially, we've been brought up over the last years thinking that social return means a reduction in financial return. There's always this versus between the two. That's changed now. We're seeing more and more how social return actually adds to good financial return. There's a big change in perspective there, and the alternative investment market is driving that forwards. And I want to give you just a couple of examples around that. So one was around the green bonds market, which has been around now for a number of years and has developed fast. The idea behind green bonds, for those who aren't familiar, is it's about raising funds for projects with environmentally sustainable benefits. So things like renewable energy projects, pollution prevention, fishery, forestry. This is a marketplace that has grown and developed very quickly, especially through governments. In 2016, £92.9 billion was raised, of which the largest provider by a third of that money was China. China is leading this in that respect, followed shortly by USA and Canada. And in fact, I think it was March last year, the French government issued the largest a sovereign green bond of around $7 billion. So we're seeing some great kind of involvement with this. I don't know the figure of 2017 yet. It was talked around about 130 billion. I think it might have even been more. So we're seeing a fast growing market there as well. The other side is social bonds. Now this isn't, it's a far newer concept. It's only been around for a few years, but again, growing faster as an alternative investment. Well, one of the nice things about it is the diversification this gives to investors, and that it's not measured against necessarily a financial return, but a social impact. And there have been some small but some growing great opportunities in this, looking around food security, healthcare services, employment generation, affordable houses, access to essential services. Often these things are areas that the governments are already trying to put money into, but now have the opportunity to use an alternative investment to raise the funds, measure it against a social impact, not a financial impact, but a social impact, and then provide a return to the investors upon that. Last year, the ICRC, the International Committee of Red Cross, launched their first humanitarian impact bond, raised around about $26 million, $26 million, with a view to how it can improve education in certain areas. Very clear measures that will then pay out to the investors should they meet those social impacts. Now, when we look at millennials and the way people want to invest their money, this is going to become more and more relevant. We no longer have to look at just how a particular market is doing, but we can see how the world around us is improving and have a financial return from that. It's better for us as our society, and it's better for the government because they're still achieving what they're trying to do as well. The issuance of responsible bonds have obviously standards that have to be met, and it's quite clear in terms of how the processes are used, evaluation, management, reporting processes, which are set out prior to the issuance of the bonds. And then post those issuance, the requirement checks and disclosure reporting to make sure that it's meeting those as well. And that's why I don't know how many of you can name all 17 Sustainable Development Goals. I committed end of last year, I was going to start a non-profit company producing posters to put in every house in the kitchen in the UK. Because when I talk to friends and colleagues often about Sustainable Development Goals, the SDGs, no one has a clue. They don't understand necessarily what they are or why they're trying to be achieved by 2030. There's some very, very clear criteria here. And when you read through them, things like, for example, number 1, no poverty, 4, around providing education, things like climate action and change. These are key things that appear, that are important to all of us in one manner or the other. And it's really important that we understand as an investment market that when we're having an impact in investments, this is the kind of goals we should be actually looking and adhering to. There's even a point whereby maybe the investment market in an alternative way can actually say, when we put an investment in place, a bond or some kind of company set up, how can we actually tie ourselves to achieving partly these goals and work together with that? You unfortunately can't read that. If anybody's interested, as a member of the RFI, the Responsible Finance Investment Foundation, it was a not-for-profit organisation founded about 2.5 years ago. We work with a number of organisation companies, basically providing a collaboration between Islamic finance and ethical finance, and basically working towards how we can achieve a better world for the investment markets. We've recently just launched an emissary program so that we can start working with many different organisations around the world to help with research and also collaboration in different markets. and you can be a member of that if necessary, if it's something you're interested in. We hold a summit in April, and certainly if anybody's interested, please do talk to me. This year we're concentrating on impact investing, which is obviously going to be a key kind of buzz criteria for this year coming ahead. A couple of quotes to finish off with. One is, having talked about the impact of society, B.R. Ambedkar, Indian economist and politician, said a great man is different from an eminent one, and that he is ready to be the servant of the society. So we don't stand alone in the world we live and just do the things we do. We need to be part of that world around us, and that's important. And then finally, the person you may recognise is Vincent van Gogh, and this is something that's close to my heart. He says, your profession is not what brings home your weekly paycheck. Your profession is what you're put here on earth to do with such passion and such intensity that it becomes spiritual and calling. The investment market is moving this way. The investment market is now becoming more in touch with its investors and the results it's producing with it. Therefore, we need to be passionate about that. Thank you very much.